Yes, ladies and gentlemen, a 50% correction in Bitcoin. What am I talking about? I'm talking about the fact that things ain't looking so good. Call me perma bear, call me perma bull, whatever you want to say. We have a problem in the marketplace. And in today's video, we're going to talk about the clean manipulation that played out earlier on this afternoon. Bitcoin goes up, entices people to step into the marketplace. Then Bitcoin goes down. NASDAQ goes up, then goes down. S&P goes up, then goes down. Why is this happening? Why is it that price keeps shooting up to only come back down again? Ladies and gentlemen, I will be introducing you to the manipulation of Mr. Market Maker. If you've been with me for a little while, you'll know that we make reference to this Mr. Market Maker who is in control of the whole thing. Always remember that the only reason you can buy is because there's someone else on the other end prepared to sell. And the only reason why you can sell is because there's always someone else on the other end prepared to buy. Ladies and gentlemen, welcome to Traders Reality. My name is Tino, and if you are new to this channel, let me take you on a little bit of a journey on manipulation. Let's roll with it. So what do we mean about a 50% correction? There is still more blood to be had across the board. Well, you think we're just going to start the new year off and things are going to look pretty good? Hawkish stance is still being remained by the Federal Reserve. There's no terminal rate. We've also got this problem with China trying to allow this COVID policy to be opened up to allow people to pass through. But they are concerned at the fact that China could actually start the whole thing again and COVID then decides to spread across the board. If that's going to be the case, ladies and gentlemen, that would then solidify the idea of a potential situation that was similar to what we had not so long ago. This is what they're trying to avoid. But let's assume that they do actually avoid it. We still got high interest rates. Looking at Bitcoin right now, it's clear to see that we do have ourselves a little bit of a situation at hand. Bitcoin makes a move to the upside, comes back down again. If you look on the weekly time frame, you can see right here, ladies and gentlemen, that Bitcoin is actually heading towards the last vector candle visible in the weekly time frame, which reaches out to the 13,748. Now, where would Bitcoin end up if it were to drop 50% from this point? It would drop down to around 8,000. Now, some of you may be aware that not so long ago, I did do a video called Bitcoin to 8K. And I gave you my reasons as to why I believe that's going to be the case. Let me tell you something. Whether Bitcoin goes to 8K, 1K, 0, there will still be manipulation. Let's dive into the chart and understand what I mean about this manipulation. So let's roll over to the 5-minute time frame, and you can see bright as day what actually happened. As you can see, today in the New York Brinks session, Bitcoin decides to make a nice little run up. Can you imagine how many people got excited about this move? Bitcoin hasn't gone anywhere for the past few days. Trading is light across the board. Earlier on, it said trading on the S&P was down 20%. This move happened and volume was down 20% across the board. This is why I urge you to always trade at the best possible time. And now is not the time to trade. But in this video, I will be guiding you into understanding how to prepare for this correction that is due to hit the marketplace. Looking at Bitcoin's manipulative behavior today, some people will say it's because someone said something. Some people will say it's because whales are stepping in and trying to pick up cryptocurrency. You need to park that, ladies and gentlemen. It's got nothing to do with whales. Okay? Nothing to do with it. We've seen whales buying Bitcoin, and Bitcoin went from 50K all the way down to 30K, then from 30K all the way down to 20K, then from 20K all the way down to 16K. Does the impact of whales buying cryptocurrency actually make a difference? Clearly not, because ultimately the market will always go to where it needs to go. No influence by any whale out there. You can't move markets, ladies and gentlemen, but markets will move. Where is a different story, and that's what we're here to try and understand. My goal is to get you to understand this manipulation right here. Now, for those of you that have been with me for some time, the hybrid system is all about understanding manipulation. It's not about understanding where to buy and where to sell. That's just the end product of it. You understand the manipulation, you are then in a position to project the idea of how the manipulation can occur. Check this out. Now, some of you may have seen this before in the past when I've spoken about it. This was a projection that I shared to the market makers in the Patreon to get them to understand where manipulation happens. This is what I'm trying to convey to you all in every single video that I do, to get you to understand the way the market behaves. No indicator out there will tell you where price is going to end up, but we are in a game of probabilities that is designed to help us understand how likely price is going to go from one point to the next. The idea of this discussion right here was to help the guys understand where to expect the manipulative behavior of Bitcoin. Now you can see what had happened in this image. Sell stop zone. What is it that we understand about a sell stop zone? What is this area? This is an area where Mr. Market Maker can grab interest. There's only one reason you will buy, because you are programmed to understand that when something is rising, you buy it. Where on earth did you get that from? You don't go into a car dealership and ask him to buy a car that is continuously increasing in value. He'll just say, wait there a second, it's $40,000. Sorry, it's $45,000. And so sorry, it's $50,000. You say, no, I want to wait. It keeps going up. It keeps going. Okay, can I buy now? They say $60,000. Oh, that's awesome. Yeah, okay. $65,000. You get the idea. You will never buy anything that increases in value. This is exactly what the sell stop zone is all about. It's about triggering the interest of traders to get them to buy. Whilst they're going into this zone, they are also triggering the retail traders' liquidation points. You think Mr. Market Maker is here because he wants to provide you a service? No, he's here to provide you a service to allow you to buy and sell. And the bond that you put up when you come to the charts, that little figure in the corner called margin, that's the dead money, ladies and gentlemen. When you borrow money from an exchange, leverage, that's the dead money that Mr. Market Maker goes for. This is the sell stop zone, and you can see what had happened. Bitcoin had given the behavior of the sell stop zone. Come up, spike down, come up, spike down, come up, and then eventually leading towards that 16,435, we have a look at Bitcoin, and you can see that it made its way towards that point not so long ago. We go into the higher time frames, and you can see that it came ever so close towards that zone. Ever so close. So actually, yeah, it came into that stop hunt, then it came all the way back down into that region, 16.2, okay? And that was that structure right there, ladies and gentlemen. Now, you can see from this structure, the sell stop zone actually exceeded. If you go back to it, it had gone up all the way towards 17,400. And we go into the chart and it actually went all the way to 18,423. But we had news announcements. The stop hunt lasted longer, but they also manipulated the charts. They made retail traders believe price was going to continue higher. They gave them 3 instances, ladies and gentlemen. They gave him the first push. Retail traders not interested at this point because he needs more conviction, because he's been programmed to believe that price rises, that's when you buy. He waits. It continues yet again. Mr. Market Maker forces the retail trader to commit liquidity. He moves it up. He then brings it back down again, solidifies the idea that it's going to probably do it again. And there you have it. You have another attempt to the upside. What is it about this move that you need to understand to be aware of manipulation happening in the charts? Roll down to the volume down below, and you can see that as volume rises towards a specific point in the chart, yet you can see bright as day that the candlesticks are not showing commitment. Look, they're not big, they're not green, they're not pushing. These candlesticks, this one right here and this one right here, is designed to move price from a zone. When you see these little candlesticks right here and volume corresponds to it, this is what you would call the climatic behavior. But you can see the candlesticks not showing that commitment. It makes the move up and pulls back down. And one of these candlesticks is called a stopping volume candle. Now, a stopping volume candle is when an influx of liquidity comes into the marketplace. Lots of buys, lots of sells, hit the market, and then price pulls back, because if Mr. Market Maker's goal is that he understands that down below is where the commitment is, and given that the marketplace is in a downward spiral, and short-term interest implies that they need to get their money in and take it out as soon as possible, then when you see this sort of structure happening during a bearish market, you want to pay yourselves. Because that's the thing about the marketplace. There is no loyalty. People will think it goes down, that it's going down. The second it starts moving up, they change their minds and it starts going up. And these impulsive moves to the upside during a bearish market are what are designed to trap traders and commit the liquidity. You just don't know how much money has been committed in this move to the upside. And the same way a lot of money was committed because they came and ripped price all the way back down again. Starting it off with this big red vector candle, which shows a huge sell-off. Funnily enough, the same candlestick opposite was this big green vector candle, which was designed to trap a lot of liquidity into the chart. That means people buying, okay? Now, let's just jump forward to Bitcoin in today. What had actually happened? Clean manipulation. You can see that when things are pointing downwards, you are not favoring longs. Now, some of the guys in the Pattern Watchers Discord are fully aware of the strategies involved in the hybrid system, okay? Now, this one right here is mean reversion. When price goes back to the norm of the range, and you can see, if we go down to the 5-minute time frame, you can see what they had done. They had moved towards the 800 EMA, which is the 50 EMA on the 1 hour time frame. Okay? And you can see that they moved price up. The same principle is being applied here. Price moves up, volume comes in, and then it starts to disappear inside this zone. Funnily enough, it hits an 800 EMA. And then they slowly start to break it down and rip back down and go down lower. This here is manipulation. You want more evidence of this bad boy? Let's go into the charts, ladies and gentlemen. Hold on. Let's go back into the charts and see that play happening over and over again. There's one instance. Stop hunt rise to the upside, coming into a sell stop zone, and they pull it back down. Mean reversion. They bring it back into the norm. Bang, look at that. 50 EMAs right here on the 5-minute time frame. They move away from the zone. Volume at its highest point, yet the candlestick doesn't go anywhere. Then they bring it back down again. They've trapped the liquidity. Because the retail trader thinks, yeah, baby, Bitcoin to the moon. That's not what happens here. Short-term interest. They don't want to leave their money in for too long, so they're going to go and grab the liquidity in the chart. This is an example of it. One more for you, ladies and gentlemen. I'm feeling good. Here we go. Let's go find another stop run. This was a news announcements play right here. So naturally, wouldn't be trading that bad boy. Here's another one right here. Stop hunt rise. Look at how they do it in the presence of 3, ladies and gentlemen. 1, 2, 3. Rip to the downside. Find another zone where they do the same thing over and over again. Where do we have it? We have something similar to this. Ready? 1, vector candle 2, big green vector candle 3, consolidate, come down, initiate the move, stop hunt rise, rip to the downside. It's not always going to work out in that smooth way. Here's another example. We've got one right here. 1, 2, and inside of here are vector candles on the 1-minute time frame, 3, rip to the downside. This is proof of the manipulation. It pumps up, it comes down again. They consolidate and prepare the positions, stop hunt low, where they trap the trader to believe, or all the guys that trade those ranges, you know, those patterns and those wedges. They set their orders, they set their lines up, and they say, if it breaks down below this point, happy days, I'm going to go short. A ton of liquidity was trapped short in there, which is why they instantly reversed it and moved back up again. And all you needed to do was trade the principle of the recovery of the vector candle on the principle that they didn't finalize the red vector candle. That was the clue right there that it was going to change, because the red vector candle originally had gone down towards this point, but then they didn't finalize below into the range because Mr. Market Maker didn't want to release the liquidity to the downside, because he trapped enough traders in shorts in this area and activated a bag load of margin to hit the liquidations. So where does that leave us, ladies and gentlemen? We're going into 2023. A couple of more days and we have a new monthly candle. It doesn't look so great across the board. If we look at the monthly candle itself, you can see bright as day that Bitcoin is still trading towards the bottom end of the monthly candle. You're not looking for longs. Please don't believe into this idea of dollar cost averaging when it's going down, because what dollar cost averaging doesn't tell you is how long is it going to go down for. The idea of dollar cost averaging is you exploit it when things are moving up. Go into the week. Let's go to the daily time frame, for example. Yeah, look at this. Dollar cost averaging is when you get no movement whatsoever and price is going to the side, trading sideways. It goes lower, I can pick up more Bitcoin because we are projecting the idea that Bitcoin's going to move higher, okay? Then you can see here, here's another example of dollar cost averaging opportunity. You can see that it goes down, so this is where you would initially be going in and dollar cost averaging because you are expecting the movement to go up because macroeconomically speaking, everything is looking okay. Yields are going down, bonds are moving up, traders are seeking investments, they're seeking to put the risk on. That's when you do dollar cost averaging. The sad souls that are doing dollar cost averaging on Bitcoin and it just keeps on dropping and dropping and dropping and dropping, ladies and gentlemen, that's not what dollar cost averaging is. You don't average down, you average up. As long as the down on the average up is not sustained, you're getting a better price feel when it comes down and then continues back up. You're telling me if you're dollar cost averaging from 60,000, you're sat there scratching your head. Yeah, you might have a bag of Bitcoin that is worthless because it's going down in value. Be mindful with the DCA strategy, ladies and gentlemen. Looking at Bitcoin, you can see bright as day on the daily time frame. We have got a few vector candles coming into play right now, and you can see 16,588, and 50% of that would take us down towards that 8K zone. We have a little vector candle region right here. We put that in the chart. Happy days. We got one more vector candle region right here. And can we solidify Bitcoin going towards these zones? Well, this is 14,223. We also have 12,070. Roll over to the high block itself, and we can see nearby the nearest pools of liquidity of traders who are optimistic about Bitcoin going up are showing that we've got $4.68 billion worth of long liquidations at 16,250. Roll over down towards this zone right here at 13,550. We have also got a $5 billion, $132 million worth of long liquidations. You don't think Mr. Market Maker's going to go down to those zones and not take that liquidity? Come on, ladies and gentlemen. I don't care what anyone says. Yeah, Bitcoin halving. Okay, cool. Cryptocurrency, we're here to save the day and all that stuff. Nah, stop it, man. You're being manipulated when you try and go on the idea that when price moves up and everything's going down, that you're going to try and catch the lows of Bitcoin. It's all a mindset. It's designed to make you commit liquidity. These little moves in the chart that you see, ladies and gentlemen, okay, especially by Bitcoin like this, stop, hunt, rise, rip to the downside. Now, the hybrid system does say that we would naturally anticipate them to come back into this vector candle region. That would only imply that we would probably see another stop run to the upside to come back down again. Why? Because there is interest inside of this zone to take advantage of the retail trader that went short. Because the retail trader that went short inside of this zone has now got his margin advertised in this area. Okay? So yeah, do I believe there's going to be another corrective move in Bitcoin? Of course I do. All right? Some people might not agree with me. That's no problem. But we're not going into a great start to 2023. We still got the hawkish stance by the Fed. We still got this problem in China. We've already got disruptions in the UK with all the protests happening up until the New Year's Eve. Railroad strikes, you've got the NHS strikes. Everything is going to the pan. You can see that big tech like Tesla, Amazon, Google, Apple, they're projecting that things aren't looking so good going into the first quarter of 2023. All we need is Apple, Tesla, and Microsoft to all declare a deceleration in their quarterly earnings. And if they miss estimates, it's solidifying the fact that the Fed has aggressively increased interest rates, and we haven't seen that impact just yet. Yeah, in the last few months, everything's been risen, but we've not had the impact. The yields have inverted. That means that people who are investing aren't investing for long. So any moves to the upside, ladies and gentlemen, you make sure that you take the liquidity out of the marketplace. Do not hold on to longs because this is not the environment for longs right now. Any fades, which is when you're fading into the narrative of the market. So when price is going down, you're fading into it. It means you're taking a little bit of a long, and it's only going to last for a short period of time, like we have seen today with Bitcoin. All right? Ladies and gentlemen, if you are new to the channel, be sure to like and subscribe. I talk about this every single day, and the manipulation is real in the charts. If you want to learn more about the manipulation, check out the Patreon. That's where I dive into detail about how they manipulate the charts, how we can pull off understanding certain zones in various assets, whether it's Euro, whether it's the NASDAQ, the S&P, and help you understand how to do it for yourself so that you're not caught out by the manipulative ways of the market. Because, ladies and gentlemen, it's going to be here and it's going to stay here, because if they can't manipulate the market, you won't have a marketplace. Have yourselves a great evening, family. Mad love and respect. And I will check in with you all tomorrow for that New York fire. Take care of yourselves, gang. Peace. Let's roll with it.